Our next panel will be centered around how partnerships between incumbents and startups can fuel and accelerate a more sustainable future, combining the innovation capacity of niche startups and the resources of large financial institutions. Both can achieve a larger impact. Our great panelists are going to be Anders Kirkeby, Head of Open Innovation in SimCorp, Adam Reynolds, CEO APAC Saxo Markets, and Elisabeth Lowenbourg-Brzezinski, Leaders for Climate Action. Moderating is my great colleague Oliver Sjostedt, Head of Startup and Growth here at Copenhagen FinTech. So over to you, Oliver.
Great, thank you, Sarah. I wish I had this set up for every Zoom call I did. I feel superior in the lounge here. Thanks for joining me, panelists. Great to see your faces again, virtually. I'm going to say a few words about the topic. Then I'm going to ask all of you to introduce yourselves, and then we'll dive into the questions. But firstly, today it's basically to talk about how do incumbents work with startups in the context of a sustainable agenda. And we have a few perspectives on this. We have both the incumbent perspective and, of course, the investor perspective from Elisabeth. So let's see if we can circle around this question. The format is going to be a bit of a casual conversation back and forth. If you have a question to one of the other panelists, just kind of raise your hand, and we will circle to that person afterwards when they're done with their point. We only have about half an hour, so let's see if we can have somewhat of a high pace through the panel and not have too long monologues. I hope that sounds good for everyone. Now I'm going to ask each of you to just do a quick introduction of yourself and your role and the organization that you're coming from. And then after that, I'm going to kick it off with a discussion question for each of you. So great, I'm going to start with you, Anders.
Yep. Thanks for having me. So my name is Anders Kirkeby. I head up SimCorp's Open Innovation. And SimCorp is a global provider of investment management software, and one of the things we're doing there is to create an ecosystem of partnerships around our established products and client base, and that involves sustainability or sustainable investing as well.
Great, thank you, Anders. Adam?
Yeah, hi, my name's Adam Reynolds. I'm CEO for APAC. Based in Singapore for the Saxo Bank Group. We've been very closely involved with the Singapore FinTech Festival since it started, and always worked with Copenhagen FinTech in their activities around the Singapore FinTech Festival as well. So for Saxo, I think it's a very interesting topic because we have a strong open banking platform that we launched in Singapore a few years ago, and that's helped us to really work with a lot of partners. And I think that as we talk about partnerships, the aspects of being able to provide partners with access to the markets via open banking become very important.
Great, thank you very much. Elisabeth?
Yes, hi, my name is Elisabeth. I'm here for Leaders for Climate Action. We are an initiative of digital entrepreneurs and also venture capital investors originating from Germany. We have now over 700 members and almost all the VC funds in Germany and growing internationally who are implementing a sustainability clause in their term sheets, in their investment documentation, and also working with our member startups to identify innovative products and solutions to combat climate change across the scope in enterprise incumbents, but also in newer, younger business models. And looking forward to the discussion.
Great, thank you. And now we have Bidyut from Dbs, Head of Innovation. Welcome.
Thank you. Thanks a ton for having me here. So I'm Bidyut. I look after innovation for the bank, and this sort of runs across all our different product groups and markets. I guess for those who don't know DBS, 10 years back, we were voted the worst bank with the lowest customer score. And we were very, consciously went through a transformation to 10 years plus. We just recently managed to pick up an accolade, getting voted the world's best. So that's a bit of our turnaround story. And when it comes to sustainability, as innovators, we feel that they're very deeply linked. So my heart is around innovation and my soul is around sustainability.
Fantastic. Thank you very much. Great panel to have with me here today. And of course, in Copenhagen FinTech, we have the privilege of working with all of you as partners, where we typically sit between the incumbents who are seeking partnerships and with the startups and kind of trying to facilitate this match. And today, I wanted to kind of kick off the discussions by asking each of you, what is the use case that kind of gets you excited in the context of startup incumbent collaboration for sustainability? So maybe you can take one from your own context. You could also pick something else. I'm just going to do a round here. We can start with you again, Anders.
Sure. Where to start, really? Because I think when we look at sustainable investing from our point of view as a set of products and as an offering to our clients, we provide sort of the backbone of the processing. But actually, what we are looking to do is to find partnerships across the value chain to support different steps. So there's a bunch of areas that are ranging from getting data in on one end and actually doing reporting at the other end, and everything in between. That's all exciting. But I think personally, what I would probably what I draw attention to is the fact that I think there's still a lot of work to be done around how do you actually articulate impact. So clever ways of articulating, basically transforming a number that it might be capturing sort of tons of CO2 equivalent hasn't been emitted, that type of thing, but putting it into context, making sure that people actually understand that the choices they're making are having a certain impact. I think that's an area where we find that working with startups who are experimenting more than we are doing ourselves in that space, that's really useful. That's one aspect. And I think another one just to highlight is around ratings. So it's been talked about a lot how ratings are around ESG are really, maybe I shouldn't say poor, but at least they are not as simple and trustworthy as ratings are in, let's say, credit ratings, for instance. It is a much more varied space for a number of good reasons. And we feel that clients are starting to ask for a deeper level of understanding of how those ratings arose, what was the methodology behind that, and if you have a particular investment theme or strategy around sort of something where you're taking an outsized exposure, you basically need to understand the drivers and the underlying data for that space better in order to actually inform your understanding of that rating. So I think that's really, really important as well, and that's where we are very much working with a bunch of startups as well as more established partners.
Great, Anders. Thanks a lot for that. So you touched a little bit on how do you articulate impact and how do you get those ratings connected to it, and how do you kind of, in a world where there is no standard way of getting ratings and there's a lot of different ways, you say that you approach it by working together with startups that are kind of innovating new methodologies and then baking that into the SimCorp universe. Thanks a lot. I'm going to jump over to you, Adam, in Saxo. Which use case kind of gets you excited within this field, and what's the kind of path to impact here?
Yeah, fantastic. Thanks, Oliver. So the use case that I think for me is the most interesting, and it is definitely something which I think can be developed considerably more over the next few years, is around financial inclusion, specifically financial inclusion of the underprivileged and unbanked around the world, which tends to happen in the less developed countries. So we have multiple different partners that we are working. Some have gone to market with financial inclusion type products. Others we are working with to bring a product to the market, and largely it splits itself down into two different things. The partner that we work with, they think about creating a journey that's going to work well for the customers with simple tools for them to access investments that will work with less than well-developed networks probably, and with simpler and cheaper sort of mobile phones. They deal with that whole user experience and the creation of the network effects that are required to do this. But for that to work successfully, you've got to be able to put clients into portfolios that are extremely efficient, well managed, and can deal with huge numbers of clients trading on portfolios and trading in small amounts, because we're not talking about people with a lot of wealth. And that's where the open API that Saxo has developed works extremely well. We can do trades in fractional ETFs and portfolios, and there really is very little limit to the number of splits that we can do on a trade. So we've become very good at dealing with batching trades and then allocating trades all automatically for large numbers of clients across small trades. But overall, the trade becomes of significant size. And keeping the cost down of doing that, and the techniques that we use to keep the cost down, are super important. You can't be charging clients, who are doing trades of $50 or $30 each time they invest. You can't be charging them $5 or $10 for each transaction. I mean, that's just all the money goes out the window there. So we worked out techniques to bring that together at extremely competitive pricing that results from the technology that we have. And that's I think more of that can have a significant impact in the world over the next few years.
Great. Thank you very much, Adam. So as I understand it, you kind of work mainly within financial inclusion, or that's the use case you brought up at least. And it's really about lowering that cost through your technology, and then enabling other companies that are able to kind of articulate the impact to go out to customers and kind of deliver the service where you have the underlying infrastructure there.
Yep.
Great. And I just had walking into this studio, I walked past another startup who went live today, actually doing sustainable robo-advisory together with Saxo. So it's another partnerships for the book. Great. I want to jump over to Bidyut in DBS. If you had to think about kind of a use case that gets you excited, and what's the path to impact here?
So for us, I mean, as a bank, we're in the business of trust. So one of the spaces that we're looking keen to work with startups is around verification. And I'm going to be specific in regards to niche-based solutions. So we're looking at, for example, if you've got a project where you're supposed to grow 100,000 trees across X hectares land. So we're looking at three aspects. One is, are the trees growing? Are they healthy? Are they sequestering the carbon they're supposed to? For ecological verification. The other is the social or the co-benefits. So along with that, are you protecting the wildlife? Are you creating jobs? Are you ensuring that there are alternate livelihood options for the communities close to that project? So that's the social or the co-benefit verification. And the third is the financial flows. Getting verification in regards to knowing that if an investor or a donor is putting money into that project, is it going to the right person and getting spent in the right way? So around that verification space and that trust space, we've seen, or we're aware of startups that are making great inroads using a lot of frontier tech. And that's a space, and those are the use cases that are really tickling my and my fancy.
Okay, great. Thanks for that. That was a little bit of a different take where you, as I understand it, like the startups that you partner with, they help kind of legitimize the sustainable transition by providing kind of data using new technology. So that's another way to kind of, I guess, articulate the impact as well, what Anders touched on. Is that correctly understood, or?
So we are looking, I mean, from one aspect, we are saying, okay, there's some obvious areas and obvious technologies and partnerships that a bank can have. We were on a current mission to be the best bank for a better world, and we're trying to look at what are the other areas of impact. So where the first stream of just looking at financial transparency would have been enough, I guess, we are very interested in the other two aspects of saying, what is the real impact we're creating? And that's where we're trying to say is if we can bring in that other layer of trust and verification, it will create more liquidity. Liquidity will create more movement, and it will be all, even if you say nature-based solutions, the more trees, the better, because Mother Nature needs all the help she can get right now.
Great. All right. Thank you for clarifying that. Elisabeth, you're of course not coming here from an incumbent perspective, but more of an investor perspective. So we just heard from 3 different financial institutions on how they kind of look for partnerships from startups that have a very strong tech and sustainability agenda. When you go out and you look as an investor, that's for startups that are tech startups, but they also want to work with a sustainable agenda. How does this kind of materialize in your world? And how do you as an investor kind of play a role in, also pushing the sustainable agenda for the startups and the way that they operate?
Yes, I think the first point I want to mention, and some of my predecessors mentioned elements of it, is that we know all that one of the biggest issues has been and still is in many parts of the world to create common standards and transparency about what sustainable and impact means. And I think in the European Union, we have gone a pretty big step this year in July with the entering into force of the so-called EU taxonomy for climate-friendly sustainable activities, which creates a whole framework across all sectors on what climate protection means, and is going to be expanded in the next couple of years. And in this framework, it is now more important than ever to gather reliable and a large amount of data that can inform the taxonomy. So this is where exactly I see one very big use case in the next couple of years for data-focused startups who are feeding into, let's say, the rating agencies, be that conventional ones like S&P or be that new ones like ISS, ESG or Ökom. So there I see a very big field of exciting technologies and providers coming up. But I think the other area that I find personally exciting are startups who hold a mirror up for incumbents to show what you have failed to do for the last decades or at least years, we can do better. And I see exciting startups in that field in the food space, for instance, where there are companies who are using significantly less sugar, who are using environmentally friendly, degradable packaging, who are active in their message to the consumer and who build exciting DTC brands, sometimes offline, sometimes also online only, who are tagging or capturing and tapping into a huge emotional connection with the consumer because of this pioneering steps that they take. So they really show the large food or also FMCG incumbents in how not to do it and how you can do it much better. So I think that is a quite exciting field just from an investing perspective. And the other element, as I mentioned, the Leaders for Climate Action initiative has implemented a standard sustainability clause in investor term sheets. So what we see is that we propose this clause to our potential new investments, and the experience and the feedback so far has been extremely positive. Most founders and entrepreneurs that we talk to are already much farther in their thinking, are very happy to embrace the fact that they should have a strategy and a climate action plan in their companies. They see it as a key to attract talent, to connect with their customers, and to also comply with the standards that the investors expect from them. So we are receiving very positive feedback, and as an investor, it is our duty to make sure the topic gets on the board agenda, the topic gets appropriate attention, and that there is somebody in the company, in the management, who is following up even in between boards. But that is the power that we as financial investors can bring to the table.
Great. Thank you, Elisabeth. I think it's one of the first times I hear about a sustainability clause in a term sheet from an investor. So I think that's a really cool kind of incentive structure. I don't know what to call it even, but I think it's a really nice initiative that will make a difference. The startups that I sit with, sometimes they might be afraid to bring up the sustainability topic with investors, right? So you're really making it okay and really signaling this is important and we should all care about it. So thanks a lot for that. That sounds super interesting. I was wondering now, I mean, this was not a question I sent in advance for any of you, but more of an open question. The concept of a sustainability clause, is that something that you've been playing around with when you do startup partnerships as well? from an incumbent perspective. So I don't know if you raise your hand in real life, we could jump to you. Adam, I see your hand on is raised, so let's jump on you. Oh, we can't hear you yet. You're muted.
Sorry, that's a user error. Sorry, I think the sustainability clause that Elisabeth was talking about is super interesting. It's certainly something that we haven't done, but what I do think is very interesting for investments into sustainable activities this year is the huge change in retail dominance in the market or influence on the market. You know, typically in the past, the retail sector has not been such an influence on the market. They've been seen to be less important in driving the flows. But with the huge fiscal stimulus that has come from coronavirus, has put a lot of excess cash into retail's hands, and they've been the stronger driver of this market more than ever before. And I don't think that that's necessarily going to go away post coronavirus. What that has also meant is a much better performance from sustainable investments or companies that are perceived to be environmentally friendly. And you can see that most of the portfolios of environmentally friendly companies or the ETFs that service this sector and the funds that service this sector have been strong performers this year and have had strong inflows from retail. And I think that that's super interesting when we think about investment flows changing the world for the better. That the retail investor seems to be more committed to the environmentally friendly investments than the majority of traditional institutional investors who may pay some lip service to it but don't necessarily follow it in as much with as much conviction as retail investors. And so I think it's interesting to hear from companies like Elisabeth's and funds like Elisabeth's how they are dealing with these firms, and also how they can spread their knowledge of the firm's sustainable practices around to other investors.
Thank you, Adam. Bidyut, I saw your hand was raised before on the sustainability clause question.
Yeah, I mean, from our side, it's more with sort of trying to look at it in a way and saying as how do we embed it into the DNA of the organization. So as leaders, it's part of the decision making in everything you do. So not specifically in regards to how you partner with an organization, but in the fundamental business cases and how you make decisions. So for example, with a traditional business case or an innovation business case, you're trying to prove three aspects. Is it desirable? So does the customer want it? Is there a real need that is satisfying? The second is your viability. Can you make money from it? And the third is feasibility. Is it operationally and technically possible for you all to deliver? So you're saying that these three lenses in a business case are not enough. You need the fourth lens, which is responsibility. Is it the right thing to do? And when you look at that, you also got to put the time scale and say, is it the right thing to do for today and also for the generations to come? So that's the fourth. So that aspect of changing the traditional business case evaluation or criteria or rubric, but also putting it into the mindset of the leaderships in the organizations that this is how you should function, this is how you should think, this is how you should make decisions. The fact that you have a clause is because there is something missing. So you're sort of trying to create that, but I'm hoping we get to the point where those clauses are needed. It's just inherent in the way people make decisions.
Thank you for that. Yeah, it's quite interesting. I guess from all of you, you talked a little bit about how do we embed sustainability in ratings, in how do we embed it towards the retails, how do we embed technology there. And now we have it from a VC perspective as well, kind of a sustainability clause. How do you embed it in a term sheet to make the conversations okay as well? I think the ratings and articulating impact has really been central to, I think, what all of you have mentioned here. And I would like to go back to you, Anders, and talk a little bit about how do you see we're going to get to a point of, measuring sustainability for companies? So how sustainable is a company or an asset? And how does partnerships kind of play a role there?
That probably takes more than a 3-minute answer. But I think that there's a couple of angles to it. So first of all, it is very much about education of the wider market. People need to understand that this is that whole ESG agenda is maybe important, and we're all sitting around here talking about how we actually really believe in this, and we think it's a critical part of the future. But it is, and that's great. But that's probably the first step, really. But it's not enough in terms of having a clear established best practice. In most other things we do, at least in institutional investment management space, it is kind of well established how you actually do different parts of the processes. But in this area, we do not have good enough best practices. So there is no. I mean, I mentioned the ratings before, where there was a really good study done by MIT a few months back, where they showed the variation between some of the incumbent providers of ratings. And at one end of the spectrum, you will see massive variation. From the same vendor, you will see that the two different assets are ranked entirely differently. And it's not because the methodology is wrong. It's because there's not enough consensus yet as to how we actually rate stuff. And those ratings are used to establish the risk profiles of the exposures of stuff, and they are made used for making large scale investment decisions. So the ratings we work with, they have to improve, and in order to improve them, I think it takes education. So people really need to understand that you can't just take these rack ratings. You actually have to maybe rely on those, but maybe you actually have to rely on three different providers. And then for the areas where you have some specialized interest, then you actually have to invest in your own alternative data sources, working with maybe startups who specialize in bringing insight out or getting insight out of that data, be that with machine learning or whatever it might be. I think that's really key, and I think there's a ton of opportunities for startups in that space, both to provide additional ratings, provide tools that allow you to create bespoke ratings for specific purposes, and then really to try and provide that exploration of data to analyze and understand what is the true sustainability risk profile of a given asset.
Thank you very much on that, Anders. Elisabeth, I saw that your hand was raised. I know we're running a little bit short on time here, but Elisabeth, please, you have the word.
No, thank you. Just briefly on that part, fascinating part which Anders mentioned. I think the reason why credit ratings have been such a success story is that they are based on a completely objective, commonly agreed data set, which also is tied into legal obligations for the company to collect, to verify, to have audited, right? Like the financial data, which we all know. And I think we need to come to the exact same point also of legal obligation with regards to sustainability related data. So in my opinion, the biggest booster you would have to make public is especially publicly incorporated companies publish a sufficient and detailed amount of data, other than, there need to be the technologies to gather them, but would be to tie executive compensation and also executive liability to the provision and accuracy of those data, just as it is to the financial data. That's just the point I wanted to mention on how can we boost this trend.
Yeah, thank you, Elisabeth, and thanks to all the panelists. And I think the reason that all of you were invited to be on this panel is that in this field of kind of embedding sustainability into financial services, there is no best practices yet. And of course, one natural response as a financial institution would be, let's wait and see until something good enough is there so we don't have to fail and disappoint and go out on a limb. But all of you who are invited on this call, you chose a different strategy, was really like, let's engage, let's work with startups that have one kind of methodology, which is not going to be the one, but really experiment together with them to make sure that we drive a sustainable agenda. So thank you for that. And thanks for sharing your insights today in this short but great panel, I must say. And have a great afternoon. And thanks for Copenhagen, and hope to see all of you soon.